Good afternoon, traders. Russell Sandiford here for Easy Markets, your afternoon rant market wrap. Well, definitely saw a lot of action across some of the key majors yesterday. The first of which, of course, the sterling came alive, led by UK bonds sharply moving, obviously on the back of the Brexit headlines. That divorce proceeding between the UK and the EU is getting much closer and clearer in terms of the divorce payment there that the UK are pushing across the table. And that's the state of play. The EU simply need to agree to that level. And then we're a lot closer to a resolution and at least a bit more clarity in that Brexit scenario. So the sterling was one of the biggest movers so far, as I've been saying for a couple of weeks. Do not be surprised if it makes a run for 136. It is bid now to 134.70. Very bullish here in Asia. We've just gone lunchtime in Tokyo trade, so there's a lot of trading to play out still left for the Thursday here, guys, across the other two key sessions later. So don't be surprised if we're at 135 rather, as early as that first part of the London session. Now, the other big movers, of course, generally speaking, the US dollar was bid. That lifted dollar CAD. That lifted dollar yen. Dollar yen took a run from the lows we saw on Monday, around that 110.80 base. We kicked that level away pretty fast yesterday and took a run from about 111 to 112, which is where we sit right now. The North Korean scenario is now a case where the US have started the war of words in relation to China, asking China to cut off the North Korean oil pipeline. China are being diplomatic, but for mine, that's not really going to be happening anytime soon, because I don't think China wants a collapse of the North Korean regime. What does that mean? We're really seeing a continuation of that story. It's not really changing. It's more the US talking diplomatically and actually trying to just slowly squeeze more sanctions on North Korea. And North Korea just doing their thing. They're just slowly poking the bear. And again, that's no real change. My point, guys, is that means the risk-off tone is still possible in the background, but it seems like overall we're happy to shrug that off. And for that reason, I'm now calling the dollar yen much higher. It's at 112 now. We can see levels above 115 if the US tax reform gets through. Now, that is the big story we need to note. The lack of opposition to the US tax reform at the moment means to me and signals to me and a lot of other bank analysts that this may get through this year. So you've got to be very careful and very nimble if you're trading gold, for example. That took a big tumble yesterday, nailed my stop at 12.83, moving back from levels around 12.96. So that's a sign of what is possible there if the US dollar is bid strongly. Gold will be left for dead and will be under 12.75, 12.80. Now, that said, the other big story, of course, we can't ignore Bitcoin and its amazing push through 10,000. It became an amazing push through 11,000 yesterday, seeing highs around that 11,400 level. For a long time on our website, I've been saying it should slide through 10,000 and make 11.5. Now, the profit taking we saw this morning very early in Asia dealing, a sharp 20% or 2K reversal back to about 9,200. Not too alarming if you ask me. That's purely profit taking. Now, it's easy for me to say that, of course, because Bitcoin traders have been in that bargain buying mood today, and obviously it's back at 10.4 now, 10,004 as we speak. I think the next level we'll aim at here for Bitcoin is 12,000. Now, part of that bull run is supported by the Nasdaq also announcing overnight that the first half of next year they will also join the CME in terms of rolling out futures products for Bitcoin. What does that mean to people that don't understand the futures market? Two things. One, big futures exchanges use standardized contracts. What that really does is add legitimacy to Bitcoin, but it adds the institutional investors access to Bitcoin. Institutional funds and big banks will not go to these little coin-based agents to get involved in the Bitcoin mania. However, they certainly will go to the CME and the NASDAQ for a standardized futures contract. So guys, for mine, we will not see this runaway train stop anywhere short of 12,000. But you've got to, as always, be nimble. And remember, with Easy Markets, we do have guaranteed stop losses, which means if you have a severe pullback on your buying on your long Bitcoin trade, with us, you've got that surety of being able to trade up to 40 Bitcoins long or short for that matter, and have a guaranteed stop, so you don't need to sweat it out and stay up all night if there is another jolt lower. Now, let's talk about some other markets. Just quickly, the OPEC meeting produced a pullback in oil because what is being toed and froed there with OPEC? The idea behind this whole meeting is to try and get agreement from the key oil-producing nations to agree to a 9-month extension of production cuts. What does that mean in English? They're trying to get key producers to agree to put less oil in the market. Okay, if that's the case, like I've been saying for way too long, we'll see plus $60 oil. Now, that's no done deal though. That's why we did see a little jolt back to 56.70. You can see that on the chart overnight. That story's not finished yet, so be nimble. I'm still very long and very strong for that $60 target. We've already covered off gold. There's a lot of action in other commodities as well, though. Copper has had a rough week after last week's ridiculous rally. From levels around 304 up to levels around 317, it has swung straight back to 305 or thereabouts to basically this week. So look, I think that's an interesting one to keep your eye on if you're an Aussie dollar trader. So the last point, just in finishing up, in terms of the majors, I made a point in our live webinar last night that one of the best trades in the market, apart from the long sterling dollar positioning, is if you want to trade where you're avoiding the US dollar, guys, look to the sterling Aussie. We've taken out 77 last night. That's one spot 77. And we're already at 177.65. I think this pair, the sterling Aussie, can move to 183. On the weekly chart, that's actually not ridiculous at all. So always be nimble with the cross pairs, but remember that you do have all of those options on your Easy Markets platform. So please reach out to us here on the dealing desk if you need a hand with your trading.